We're looking back at 2023. Let's talk some commodities with Dan Deming. He's managing partner at KKM Financial. And if you don't include Bitcoin as a commodity, Dan, then the winners list is pretty short this year.
It is, Oliver. It appears, yeah, as you mentioned, gold basically is one of the few that you can find in that camp that's had a positive year. And you look at some of the other major commodities that are heavily followed and really some pretty heavy selling pressure, particularly when you look at natural gas. But gold is the one winner, up about 11% so far this year and holding actually just below all-time highs.
Yeah, the record that we touched for gold that we quickly backed off from, kind of one of the big head fakes of the year, I suppose.
Absolutely, yeah. We did see that explosion above 2100 intraday briefly as we had to close the prior session of just shy of 2090, which was an all-time closing high. And that provided a catalyst for kind of a blow off top. But, some lower price action through the month of December. But overall, Oliver still holding just below those all-time highs and has been able to recover some here after testing that 2000 level. And it does appear to me, moving into 2024, that gold is in a position, particularly if rates continue to moderate or continue to the trajectory is lower, that there's enough other confluence of events out there and other items as far as data and central bank activity that benefits, I think, the trends in gold. And I do think that we will see a new high for gold in 2024.
Do you think rates need to cooperate? Dollar, what is the linchpin upon which higher gold prices depend?
Well, the dollar would be one of them, and again, you and I have been discussing this for the last several months. That I still feel that the dollar is going to break parity as we move into 2024, and if that's the case, then I would suspect that that would be the catalyst for gold. Yeah, interest rates is a short-term influence. When we did see last fall the idea that rates could stay higher for longer, that's when gold came under some pressure before recovering very sharply once the Fed kind of pivoted, I guess, to some degree, and other central banks as well. So I think that that's going to be a theme as we move into 2024, Oliver. But current conditions, just the current pricing structure within the interest rate environment, even if it doesn't shift too much from where it is right now, I still think that that favors gold moving forward.
Okay. Let's flip it around here. I like to take on gold, Dan, and I think it makes a lot of sense. Let's talk crude, where gold kind of has those key relationships with other macros. Crude has been tricky, very tricky, and you can talk to two different crude experts and they'll tell you the opposite thing.
That they will. The one consistent, though, Oliver, even though it's had a pretty big price range this year from a low around 64 to a high of 130, it does appear to me that there's some pretty substantial support right around that 65 level as we've tested it multiple times in the summer and then later this fall and held. And I think that when you look at how it's kind of being produced and transported around the globe, I'm certain the U.S. is producing more oil than we ever have. But I do think that there's enough influences in the market that will keep WTI elevated as we move into 2024 within that range that we basically have been in for the last half of 2023. I still think that 65 on the low end is probably low, and I think that we could see a tick up to 90. But probably the sweet spot for most producers and the way that OPEC Plus is trying to price this is somewhere around that $75 to $80 range. And it does, I think the metrics in the market still favor that we're going to see WTI and crude in general pretty much hold that range and not get too far out of that, at least in the first half of next year.
Do you view the U.S. supply as a big story here, Dan? How do you think it ranks compared to the weakness from some of the softer economies around the world and what they might be dragging from the demand side?
It is, and we continue to pump out more and more production and much more efficiently as well. And I think that's another big factor that's been, influencing the markets the last couple of years because the efficiency continues to increase, cost structure going down, and that's going to be a factor moving forward. And that's why I think that there's a cap on the upside. But I do think OPEC Plus and some of the other dynamics and some just there's still the tensions in the Middle East, Oliver, and that is going to have some create some bumpiness for the supply and the production moving forward, I think. And there's enough offset there. And if we see any uptick, let's say out of China, and I kind of think that we will next year, that's going to change the pricing structure and I think increase expectations and demand. Now, natural gas is another story. Again, production continues to ramp up. There's new sources and transportation of natural gas to other parts of the globe, particularly coming out of the U.S. And I do think natural gas is going to continue to remain subdued next year.
Okay, that's very key. Love that distinction. Because natural gas down 37% on the year. A lot of times we put those energy commodities in the same basket, but boy,
right.
Performance-wise, they really are not, are they?
I agree. Yeah, absolutely. Yeah, there's different dynamics there. There's different things that were influencing the market the last couple of years, and now some of those bottlenecks, some of the production, and the transportation being the key thing here for natural gas. And LNG continues to expand. The U.S. expansion of exportation of LNG is just continuing to ramp up, more so, I think, than what we're seeing in the production and exportation of WTI.
All right. There we go, Dan Deming. Good combo. Thank you very much. Thanks
All
for
right,
the help
Oliver.
navigating the commodity storms this year. It's pretty fun. Dan Deming, KKM Financial.